Good evening. I hope you had a good day. Are you having a good day? Are you having a good day? Good. So we have our partners. We have Featherlight, and they have a very nice innovation in their chair. So clearly, some of those who want to work, invest in the next growth in the 1 billion. Please sit on that, cycling chair, and you can lose weight, be healthier. And our gifting partner is the right shift from ITC. That's also very healthy snacks. So between both our partners, you can have a healthy lifestyle. Uh, we should partner with Taj also to make sure they all don't have to get late in traffic jam. They can sleep here, do 8 hours of sleep, then go for spa. Next conference, okay? But on a serious note, we have two stalwarts. I met Mr. Bruce Keith for the first time today, but I was looking at his profile preparing for the session. He's over the last 3 decades, he doesn't look like he's worked for 3 decades, but I did see when he passed out where all he worked with 1 or 2 friends of mine, and he passed out in 1991, right? That's right. So I'm not talking, that was much before that. You passed out in the pub. But from the college, you passed out much.
And since.
Yeah, that we will not discuss. Okay. And Miss Anisha Patnaik, who's the founder of LexStart Partners, and I have interacted very briefly with her twice because she's won our BW Legal 40 under 40, and she's also the winner of our BW Legal World Best Lawyer of the Award, one of the years, I don't know which edition, and Sri Rupa is there. She started a BW Legal World community, and now she's turned an entrepreneur and building a legal AI setup. Today we are going to discuss at the BW Businessworld Fintech Festival, how do we unlock the next billion? Where is the next real opportunity? Let me get the opening comments from you, Mr. Keith, and then we'll go to Anisha.
I'm not sure I'm best placed to answer that question, but I can give you my perspective as someone who's relatively new to India, and as you say, who's actually slightly older than I look. When I was growing up, it was all about savings. We weren't taught to invest, we were taught to save. And it was only kind of once you were in your 30s that it dawned on you that inflation killed savings. So the fact that we can get people into the investing industry, we're in Bangalore, the home of Zerodha and the home of Grow. We're in a place that has really opened up access to lots and lots of young people. I think that makes a massive difference to where we're going, because it's not just about savings, it's about savings and investment. And that's what's going to give people, whether you want to think of it, as a side hustle or a way of growing passively, it's how you get to that crowd. And I think the answer's in tier 2 and tier 3 and beyond. And there's a whole lot of issues in terms of getting there. There's issues around language, there's issues around education, but that's where, as an industry, we've all got to be going, because if we do that, there's a lot of people already there that want to do something. And the proof of that is Dream 11. Dream 11, before GST changed, Dream 11 had more active participants than the mutual fund industry. So people are there and they want to trade in some shape or form. We've now got to give them the right kind of education and tools to go and do that.
Absolutely. And now Bruce has relocated to Mumbai. He lives in Mumbai and he's trying to build, InvestorAi from Mumbai. And thank you, Bruce. Clearly opportunities in tier 2, tier 3, and we'll come to that. But you're right that we are under-penetrated in almost every category. Before COVID, the retail investors on stock market were abysmally low. Of course, in the last 4 years, we've done some bit of catching up, but the upside is tremendous in insurance, in mutual funds. We have a winner at the BW Businessworld Fintech Awards. He was with me in the flight and he was explaining to me his business model and how they're serving rural India, how they're doing cattle insurance, how they are making sure the drivers who keep borrowing money in their villages, not even tier 2, tier 3, at 36%, how did they enable it at 18% and made sure that their livelihood. So there is a huge opportunity in Bharat, how to find credible partners. Some of the winners in the FinTech Awards truly represent the opportunity that you're talking of, but we'll come to that. Anisha, your opening comments.
I think I completely agree with both of you. It is the time to build for Bharat. Now, while we know the consumer mostly is there, but it is also important that our regulations, the network, etc., also kind of penetrates into Bharat, right? So the disadvantage today is people are building for Bharat, but people who are in tier 2, tier 3 cities who are trying to build for Bharat do not have access to the kind of sophisticated mentors, network, investors that people building in metro have. So it's very important that our regulators, our investors, and the community builders look at Bharat now and try and empower them.
Right, Anisha. You want to add to that?
Yeah, so I completely agree with you. I think one of the advantages though is the average age. The average age across the country is what, 28? And if you look at whether it's crypto or whether it's derivatives or whether it's any of these things, it's the young people that are driving it. And I actually think we've got to be careful in regulation that we don't cut those people out, because they're going out and trying something, and some might work and some might not. But we've got to allow them to do it. And if we don't trust the young to kind of go and try and do that, we're never going to get them on that journey.
Absolutely right, Bruce. And Anisha, just to say, there is a friend of mine, his name is Abhijit. He runs AHA Ventures, and there are other, right? And all the investors, he has a huge network. They come from not even tier 2, tier 3, some from really villages, or let's say tier D, if I had to say. And they all want a piece of the startups there, because some of them invested in startups early on in 2018, 19, and they got spectacular returns. So I think today, because of internet, because of media, whether it's a Shark Tank, whether it's a Businessworld, I think there is a aspiration that exists in their tier, and that is being fulfilled both on the supply side and the demand side. So I think sophistication is in simplicity. And I think the rural folks have that sophistication and simplicity much more than a lot of my friends and me. Okay, I can't talk about both of you, but me. And so I think they will figure out. Let me ask you, Bruce, now, have the valuations become palatable over the last few years? Because you worked in various markets, various sectors. You have invested different kind of capital at 3i. You're doing different, and I saw all of your organizations. So how do you see in 2025, you're in July 2025, how are the valuations? Are they palatable? Are they undervalued?
Can I just say this is a fantastic Indian question, right? Because if you sit outside of India and look in, you say, wow, the opportunity is unbelievable. It's absolutely unbelievable. And when we sit here, we think, oh, is that a little bit too expensive? I don't want to pay that. Actually, I think we're on a 20-year bull run. I think we're sitting, we're going to look back on this in 20 years, if we're still around. Some of us are that old. But we're going to look back and say, this felt like the kind of US in the 90s, and that run that they were on.
Brilliant.
That's where I think we are. It's not going to be a straight line. There's going to be ups and downs, and it's a bit about holding your nerve. I've got a significant amount of my personal wealth in India. I've got more of my personal wealth, excluding property, I've got more of my personal liquid wealth in India than I do in the UK.
Anyway, UK has 40% inheritance tax, so you're wise. So there's nothing. If you're running away from UK, you're a wise man, clearly. Okay.
My wife's still in the UK, so don't ever.
Yeah, no, I love UK too. I mean, there's no question. But you're right, and just to give you support, a Korean company which is a Chaebol, a big conglomerate in Korea, they've over the last 7 decades created wealth in Korea. In one IPO, their Indian subsidiary has more wealth, much more wealth than their market cap in Korea, right? And I can give you an example. So yes, we can say the glass is half empty or half full, but the dreamers who see the value are able, and the investors are bigger dreamer, Arun, than the entrepreneurs, because they believe in your dream and my dream, and they also know the value. That's why they put the money at a certain multiple, right? Now, Anisha, you deal with entrepreneurs, you deal with deals, you deal with, advisory in terms of deals. What is your response to the valuation question?
I think it completely depends on the sector. There are some sectors that have amazing valuations.
Give us examples.
AI.
Yeah, chai.ai.
Great value for money, I think.
चाय वाले का भी valuation बढ़ जाएगा. There is a Umesh Dosa point in Bangalore. I think you should call it umeshdosa.ai and increase his prices by 200%, right?
Fintech continues to be the
Of
darling
course.
of the investors. But then there are others where, you're not seeing the kind of valuation spikes that you're seeing in these sectors. To give you an example, D2C, right? Some are great, but mostly it's very, very muted valuations that you're seeing. So it's basically sector specific, and that's always been the trend. Whichever sector is the darling of the investors at that point of time sees incredible valuations.
Okay. I think, again, I would say the beauty lies in the eyes of the beholder, and the investor is clearly the beholder. Clearly, they see some value, and in some cases, it has been proven right that it may have seemed like a little more over the top valuation, but markets are a good judge. If the markets are ratifying that or topping that up, then it's a good call. And I think there is also a scarcity premium for good companies.
Absolutely.
And good ideas and good entrepreneurs. So there will be some premium for such companies. How do you democratize access? Anisha raised this point that there is still an issue of democratizing access to capital, to advisors, to mentors, to the ecosystem. How do you democratize that?
When I think about the investing ecosystem, I kind of think of it in sort of 4 bits. So, the first piece is about education. The second piece is exploration. So once you know kind of why you should be doing it, then how do you find what you should invest in? The third piece is execution. And the fourth piece is explanation. So after you've bought whatever it is you've bought, and something, it goes up or goes down, understanding why that happened. Execution, brilliant, right? Again, we're in the city that founded 2 of the big names. Execution is
No
absolutely
exploitation, the 50. No. Okay. So private equity guys don't exploit. They're the nicest people I know.
So execution.
It's not a joke. Why are you laughing? So it's not. They are the nicest people. Clearly, you don't know the right guys. But back to Mr. Keith.
So I was talking public markets, not private markets. Obviously, we'll ignore private markets. But on public markets, execution is brilliant. There's so much access to that. It's dead easy. Where we're having to play catch up as an industry is about education, exploration, and explanation. And it's all very well saying we're going to make these derivative products available to young people, but kind of how do you get out and kind of explain stuff to them? So I think those are the things. And if I look at, I'm not in the VC world anymore, but if I were in the VC world, I'd be looking for businesses that don't just do execution, but can actually do those other bits as well and hold that as a core value to themselves. I think that's going to be key. I think the other thing that's going to be key is product. So to the valuation point before, honestly, one of the reasons values were going up and up and up, India's such a scale opportunity. You can apply all sorts of numbers to it. And I think what we're starting to see now is we're starting to see more product companies come through, companies that have got IP rather than service companies. And I think that's going to be a really interesting change in the whole kind of valuation piece as it plays out.
Okay. And let me ask you today, the biggest issue is about climate change. It's about ESG investing. How real is that? Is that talk or is big money being put? And what is the kind of considerations you look at in a startup that may not be evangelizing ESG, but is consciously or subconsciously rather embracing it?
So, is ESG a thing? If you believe Donald Trump, it's not.
Well, Donald Trump, he said climate change is a hoax, right?
He's got orange skin. That tells you all you need to know. So
he's thinking of deporting Elon Musk. So clearly, he's a very progressive person, I would say.
So ignoring America for now. If you're in Europe, from a European context, it's a really big deal. And that partly reflects that you've got a much older population, you've got young people coming through that feel really disenfranchised, and they're looking for something, and they're kind of looking at their future and what's happening. Everyone I talk to in India, if I talk about ESG or in the old days CSR, they were like, no, we just want to make money.
Sure.
So I don't think it has, in the ESG label sense, the same impact here. I think there's a different thing that is going on, which is about kind of where we make our capital work and how we think about the impact it has across communities and across people. I think that's a more important thing. But part of the problem we have as investors is, how do you grade and score all of those? And one of the reasons ESG gets a bad name is because you get oil companies with a really good score.
And they're doing greenwashing.
Yeah, yes. Absolutely. So how do you do? If I think about the challenge that we're talking about in terms of the next billion, and what we're kind of doing, what anyone's doing there, how do you actually score so that people can roll that into their investment decisions?
Anisha, your take.
Yeah, so I would like to add to the fact that in India today, you're seeing ESG as more of a tick in the box. Several investors make it mandatory for their companies to give them ESG reports. And these are like 8-10 pages reports that every year the companies are just signing. But so you're seeing that trend starting where the investors are trying to get the companies to try and adopt ESG, but there is a lack of clarity on what is expected in terms of implementation.
Right. But let me say to you both that there are funds that are purely ESG focused, like my friend Samir Shah of Peak Ventures. He was the first investor in Wari. He's invested in multiple, and he's got Sanjay Nair, the ex-KKR guy, to invest in him. So, and there are at least 6 funds like that. And in Businessworld, 5 years back, we started ranking India's top 500 companies on sustainability in a deep way with domain experts. Arun Samuel is there. He's the chairman of Wings, and they're a very well-known entity in the experiential space, and he's expanded. Now today, the biggest thing is doing events that are ESG compliant, that are taking less energy, where the materials being used are more recycled, especially when it's B2C. You go for a concert, or there is a experiential, setting. So clearly, it is no longer just a fad. Today, in UK, in India, there is a huge climate disruption. The temperatures are rising, and if they rise by another 2 degrees, I watched BBC show in the next 6 to 10 years, and I'm not talking like before 30. Also, it could happen. The earth will be a difficult place to live, right? Why is air conditioning growing in India? We were at 6 million tons of air conditioning 4 years back. We're at 13 plus. And in next 4 years, we are expected to be 30 million. It's clearly because the temperatures are rising, right? So ESG is a real issue. What's happening to oceans? If you read the latest issue of Time magazine, or you read Mr. Attenborough's book called The Oceans, you'll be very alarmed with, if the ocean health is not good, the earth health is not good. It's a good barometer. So ESG has to be very real. Now let me ask you.
So look, I fundamentally agree with you, but do you think it's real in the eyes of the consumer? Climate change is, but is ESG as an asset class? And I guess my reflections from an India perspective, I don't see enough people thinking, I'm only going to invest in that if it's got the right ESG score. I think they'll invest in it because they think they can make money out of it. So I don't think that connection's quite there at this point.
Thank you for being real on that. Anisha, now let me start with you. Where are the next few jewels going to come from? What sectors? Give us something that we don't know, or things that you can see because you're involved in deals, or you see a lot of decks. And the same question to you, Bruce. Give us some sectors that we have missed. Of course, AI is growing, drones is growing, agri-tech is growing, anything that is technology as a service is growing. But give us sectors that we've missed.
if you have missed something, there's no way I would know about it. But
Only two people who know everything in the world. One is Google/Siri, the other is my wife. There are not other people who know everything, but so I don't know, claim to know everything.
no, so I mean, RegTech, Space Tech, these are definitely of course, and climate tech, right? We just talked about it. So these are definitely the sectors that, of course, it'll take time. It's not going to happen overnight because, especially if you look at space tech and climate tech, you really need to find scalable business models as well. So, but these are the ones where we see a lot of action potentially happening in the future.
And especially, which are yours, Bruce?
So I was actually gonna give you a really specific answer. So it's not. This isn't a set. So I'm chatting to my head of my labs business, who's an absolute genius, and I said to him, "Can you do something with gold?" He went, "Okay." So he went away and we've got foundational models. He wrote a kind of bunch of models on top of that, and he put 2 lakhs into a Zeroda account. 6 weeks later, it was worth 4.6 lakhs. Just using the model to kind of do what it needed to do. So I think there's lots of money to be made in some really traditional stuff. And if you go back to that old analogy about the gold rush, sometimes you invest in the spades and the shovels.
Absolutely. The infrastructure business and the real inputs to every business, kind of business will grow. Now, I want to ask you the last 2 questions. One is, again, from your experience of 3 decades in investing, we are at a fintech summit, how is the nature of wealth management getting morphed by AI?
The real answer right now, it's not. It should be. It really should be, but it's just such a small portion of it just now, in my view. I think if I think about the whole wealth management pyramid, so forget India for a second, let's go global. There are 2.1 billion people on the planet who've got enough liquid assets to be advised. There are 2.05 billion people who are not advised, right? The pyramid is so tiny at the top. We've got to get that to move down the pyramid. And the only way that you can do that at scale is through tech. So I actually think that wealth management is hardly scratching the surface just now. I really do. I look at the stuff that we do. I look at stuff that other people like us do. There's a lot going on, but it's scratching the surface in terms of whether it's AUM or the number of people that it's getting to as the whole pyramid.
So the future of investor management and investor engagement is going to be very different than what it is today?
I think so. So I know, take a mutual fund, right? I know a lot of people in the mutual fund industry in Mumbai. Typically on a monthly basis when they go and change all their positions in and out, the impact cost is about 1.5%. Over a year, that's 18%. That fund's got to make 18% before it even hits zero. Then you've got the management fee and you've got all the other costs and the distribution fee and everything. They're having to clear more than 20%. Versus if you just had that equity in your DMAT account and you had a bit of tech that was helping you to kind of do that. Why would you kind of go down that particular route? So I think if you take that as a kind of industry standard, starting from it, there's so much you could do, whether it's on the research side, whether it's the customer interface, whether it's explaining what happened to your portfolio. There's lots and lots that can be done around that. I would be surprised if we look back in 3 or 4 years' time and don't see a completely different model in place.
Thank you, Bruce. Anisha, your take?
I think, I had a question for him more than a take. In terms of the business models, right, when it comes to wealth management, because at least when I see an Indian consumer, right, do you think the potential is more on the back end, like a B2B or a B2C?
It's the old manufacturing distribution thing, and I think if as you say, there's VCs in the audience, but there's a lot of VC money has chased distribution. Distribution is a tough old game. There's
Insurance,
a lot. Insurance,
it has happened.
Yeah, but distribution is just tough. So for me, you've got to be in manufacturing. So I think it's a manufacturing piece. Then how you tie up with distribution, and then ultimately I think we'll see a lot of the current distribution channels will change over time. They have to change because right now they're taking too much money out of the piece, and we'll start to see the consumer go direct.
As I said, my last question. We cannot have a fintech conversation. We're talking about future. What is your view on crypto, and where are we headed with it? Bruce?
Okay. I love crypto. I really do, right? And I know everyone hates me for that, but I actually do. I think some crypto is absolute nonsense, but I think there's some genuine use cases. So firstly, do you believe in blockchain? If you believe in blockchain, you have to have crypto, because crypto is the oil that makes blockchain work. So that's kind of one.
But let me ask you a very fundamental question. The criticism of crypto is that the price is yo-yo. It is not backed by any science, no demand supply. The pricing depends, and there are non-credible actors. I mean, I can give you examples of the failure.
I completely buy that. I also think there's a whole bunch of currencies out there that are even worse than what you describe. But let me give you an example of a kind of real use case. So my ex-head of product now runs a crypto business in London. And what they've done is they've tokenized uranium. So one of the things with uranium is, obviously, it's difficult to get your hands on unless you happen to be in a mine shaft in Iran. It's difficult to get your hands on. And therefore, it's very important to have an audit trail of what's going on. But if you want to trade it, it costs you the equivalent of 1 CR for a tradable unit. Now, most people aren't going to go and trade single crores in terms of what's going on. So you've got to find a way of creating fractional. Units for people to. So they've tokenized it. So how you get the uranium on and off chain is using all the normal audit processes you would do. So it's not as if it can disappear off to someone that it shouldn't do. But in the meantime, it's within an ecosystem that can be traded. I think that's a fabulous example of crypto working.
So again, tokens backed by assets is a little different conversation, but having a pure play crypto is a little different. I mean, of course, any financial instrument that has an asset backing it has value. That is absolutely
What about
right.
gold? What about gold?
Gold has value.
Does it?
Yeah.
What can you do with it?
You know, I mean, gold makes people happy.
It really does. I agree with you. It really does. But kind of gold and Bitcoin. Bitcoin makes some kind of techies happy.
What is the logic for the price? It went to a certain low. Now it's a certain high. Friends of mine who are holding it are predicting a number, and it's like, it's a big number.
Yeah, look, there's a whole load of currencies out there. I think there's only about 3 or 4 that make sense. And they're the ones that you need to oil the system, whether it's ETH or whatever it happens to be. I think, Bitcoin, because it's first, has got a kind of a funny place in the universe. But I do think gold is the same. People were talking about kind of lending on gold earlier. I'm talking about having gold models that can do interesting stuff. But fundamentally, what can you do with it? It looks nice, makes you feel good.
But the gold is
So does my
separate.
wife.
There is a base. There is a supply base. It's a whole discussion I won't do, but I understand the point. But I think there is a distinction between cryptocurrency and gold. That's, Anisha, your take on where is it headed?
So actually, about a couple of years back, I wanted to kind of understand this better. So I actually started practicing and helping people set up crypto exchanges, etc. See, my view is that, like what Bruce said, crypto is a completely different animal by itself. No one knows how it's getting regulated, not in your control. But blockchain, tokenization, right, linked to real world assets, a lot of potential, and that makes a lot of sense. Crypto generally, like I agree with Bruce, there are a couple of players that, probably are more credible than the rest. But otherwise, it's this whole different world out there where people are just kind of misusing it as well. So I would actually steer more towards tokenization and look at it that way rather than just generic crypto.
Thank you.
Can I give you an India?
Yes, sure.
An India use case. Robinhood this week announced that they are introducing, time's up, they're introducing a tokenization for people to invest in markets that are not accessible to them. As someone who has got his money sitting outside, it's really difficult to invest in India other than buying ETFs. So I think that is a great way of being able to invest in markets you can't get.
Thank you, Bruce, for that. Thank you, Anisha. Please give Bruce and Anisha a big round of applause.
Thank you.
If there is a question, you can talk to them in the break or after the awards. We have one more session and then we have the awards. And Amar is back here. When I grow up, I want to be like him, have a hairstyle like him. I'm sure I will have that very soon. It's expecting Bitcoin to be rational. That's the kind of expectations I have.
Absolutely. And I'm wearing full socks this time. I made some money out of it there. Yeah. Yes. Just for you.
You know, every time he anchors an event, I see him not wearing socks. Today, he's actually wearing socks.
Yes.
I will be paying him a lot of money. Okay.
Didn't have any
But give Amar a big round of applause. He's among the best MCs that I have seen, and I've seen a lot. So give him a bigger round of applause. Clapping is good for heart muscles.